going on, guys? Welcome to yet another edition of Study Crypto. Today, we're going to talk about, is it too risky? What's going on in DeFi? The best way to make some money and protect your money, and not how to get wrecked. But first, before we get into everything, please do us a big favor. Hit that like button as well as the subscribe button and ding the notification bell as well. We really do appreciate it. It helps the YouTube algorithm get these videos out to people ASAP. And as always, this is not financial advice, not a financial advisor, and crypto investing is risky, so please do your own research and be very, very careful. Now that that's out the way, let's get into it. First, we're going to look at the market. Just a quick overview, see what's going on with the market. As you know, we are entering our uh, bear market experience. This is the Bitcoin CME futures. This is the Bitcoin that's traded on the CME, the Chicago Mercantile Exchange, the only publicly traded Bitcoin in the U.S. Just looking at the chart. This is the weekly chart. Everything is down, of course. Down weeks. This is a weekly. This is a daily chart, and yeah, we're still down, going down in a bear spiral. Nothing to report here. No reversals in sight. They would definitely appear. The reversals would definitely appear if there were any reversals in sight. Nothing on the 821 EMA, and the MACD is going down. Red. This is bearish as heck. So everything is bad. This is this white box right here. This is a key level that we hit, and we might touch that again. This is where a lot of buy orders are likely to take place, and price is likely to come back down into this area to fill in this gap here. But anyway, we're in a downward trend going down. Nothing to report here, whether it's Bitcoin or anything else. If we look at ETH, same thing here, downward trend. Rune, everything is bearish. There's no bullish activity. Nothing even that's turning even a little bullish. So that's just where it's at. That's where we are in the market right now. Only thing that looked kind of promising is maybe Olympus Dow. That's starting to turn the corner here, but it still remains to be seen. It's still too early to say one way or another. But what I wanted to get into today is, obviously there was a lot of risk. People were doing risky things in the bear market, in the bull market, in the crypto market in general. And just wanted to talk about that. But before we get into it, just for perspective, right now with our current decline, this was a few days ago, we're at a decline of over $7.6 trillion, which is, it's already the steepest decline. We're talking about all assets in terms of the Nasdaq, which is a much bigger place than the crypto market. It's down $7.6 trillion. There's not even $7.6 trillion in crypto. So obviously this isn't the crypto market. Crypto is only at about 1.5 trillion, the entire crypto market. So we are at record levels. We haven't had this much of a crash. The crash hasn't made this much capital evaporate since the dot-com bubble burst back in 2000-ish. Okay, we're in a deeper downtrend, destruction of capital, destruction of wealth, and what happened with the COVID-19 sell-off, as well as the global financial crisis in 2008. So just to give a little perspective, it's not looking good. But the question is, how do you identify opportunities, whether it's looking good or bad in the market? So let's consider a few things. How do you find out if something is too risky? Well, one criteria that is good to implement is the average return higher than 50%? That's a good way to measure if this thing that you want to invest in is too risky. When I say 50%, I mean 50% annually, not 50% a month, 50% a week, definitely not 50% a day. But is the thing that you're trying to invest in telling you and promising you and swearing to you that it can give you returns of 50% or greater? Because if so, that's very high risk. Not to say they're lying, because they very well may be telling the truth, but chances are it ain't going to work out. Because chances are, if they're not lying, they're just not correct in terms of it being a sustainable 50%. See, you may be able to find a protocol that'll give you 50% weekly. You may be able to attain that kind of return, but you're likely not going to be able to sustain that for more than a few weeks, few months at most. So if you're looking for something that's sustainable, when they're talking about numbers like that, that's crazy. And unless you're really good at timing the market, which most people are not, unless you're really good at taking profits, which most people are not, I would just stay away from it. Because while I'm saying this, you may say to yourself, hey, if I find something that's paying me out 50% a week, I'll just jump in for 2 weeks, take out my initial capital, and then the rest I'm going to just let it ride. You may say that to yourself, but chances are 7 out of 10 times people don't. They get greedy and they leave their money in and they let it ride. And that's where they get burned. And it's easy, and it's much easier to consider doing that if it's just a 2 week period, 50% in 2 weeks, every 2 weeks. Sure, you could think it's a lot easier decision to say, oh yeah, I'll leave it in for 2 weeks, and maybe after the end of 2 weeks, I'll take out, I'll have 100% profit, I'll have my capital in there, and I'll just let that ride. Well, sure, that's a little bit easier, or 50% a day, which is nowhere. But the problem comes into play where a lot of these projects will offer you 50% every 45 days. And so when those time scales get elongated and stretched out, you tend to make worse decisions because when it's time to take profit, most people don't. Most people let it ride, most people get lazy, and then most people get wrecked. So, I say that to say, if the project is offering 50% annualized returns, annually, not weekly, not monthly, not biannual, semi-annually, annually. If it's offering returns like that, I would either A, steer totally clear of it, or B, put in 0.01% of my total crypto value into something like that because it's basically a lottery ticket that you're likely to lose on. Okay, all those Titano forks and all those things, those are all pretty much wrecked. Yes, you did have a few people like Jesse Eckhart who made out well, put in $3,000. 3 months later, had over $1 million in Titano. Yes, yes, that's inspiring. Yes, yes, I'm looking for that same opportunity. Yes, but the likelihood of finding it, it is a needle in a haystack that is larger than all of planet Earth. The likelihood is low. He won the lotto. Good for him. Congratulations. But you know what? It's unlikely to happen again. Lightning doesn't often strike twice. So to make that kind of return in that amount of time, not saying you can't turn $3,000 into millions in crypto. Sure you can, but not in 3 months. That's not typical. That's getting lucky. Now, if you're turning $3,000 into $1 million over 3 years, while getting into the right asset initially, up front, early, sure, that can happen. Absolutely. There's tons of millionaires from Hex. They put in $100, they're millionaires. Tons of millionaires who got into Ethereum when it first launched. Put in a few $100, they're millionaires. Tons of people who got into Litecoin when it first launched. Put in a few $100, they're millionaires. inside of 3 years. But 3 months, 50% returns in 45 days, very unlikely. My recommendation, steer away from it, not financial advice. Next, is the target too big? So is the project so large that it paints a big X on its own back that all the smartest hackers and thieves and con men and programmers want to go after it and find any of its weak points, find an attack vector, find a way to drain that account and take all your money with it? Is it too big? See, the other challenge in DeFi is this. Oftentimes we trust that the bigger a project is, the safer it is. Well, we clearly saw that's not the case with Luna. It was one of the biggest, 20 plus $billion. It became a big enough target that the smartest guy in the room, smartest guys and gals in the room, finally took it upon themselves to take it down and drain it because it became big. It became so big it was too tempting to not drain it. And as smart as we want to think a lot of these creators are, a lot of these blockchain protocols are, a lot of these DeFi strategies are, as much as we want to think that they're smart and think that they're superior and they're impenetrable, the fact is right now that's just not the case in DeFi. In DeFi, anything can be taken down. If they could take down Luna, they could take down anything they want. It just has to be a big enough prize at the end for them to do it. BlackRock is a company that deals with hundreds of trillions of dollars. It doesn't get up out of bed in the morning unless there's at least a $20 billion bag to be had. And Luna had a $20 billion bag, so they figured it out and took it down. Simple as that. Another day's work, another penny earned. That's how they roll because they're dealing in the hundreds of trillions of dollars. They're dealing with a concentration of the smartest minds on all of Earth when it comes to money, finance, and technology. That is not going to stand a chance against Do Kwon or anybody else if the target is too big. So just keep that in mind. If something is too big, be careful. You may want to get involved with it, but only put a little bit of your crypto into it. Again, the safest thing for your crypto or any investment, well, primarily crypto, is cold storage. Cold storage, ladies and gentlemen. I know that's not what you like to hear. Cold storage. Maybe do a little staking on the side. It's pretty much it. Not really big returns there. You might be looking at 5, 6, 7% annually, but that's reality, folks. That's where we are. Another big question, stablecoins, which ones are safe? We already see that UST took a nosedive. Day on the Phantom chain is off peg as well, down to like 30, 40 cents. A couple other ones are getting knocked off peg. USDT got knocked down to 93 cents. All these stablecoins getting off peg. What are some of the stablecoins that are worth getting into? Well, the ones that aren't going to get on peg are the ones that are actually backed by something one to one or greater, meaning over collateralized or fully collateralized. Which stablecoins are either over collateralized or fully collateralized? Well, MIM is over collateralized. That's a good one. If you want something a little more mainstream, USDC. It's a centralized stablecoin, but it's backed one to one. What else? BUSD, Binance's stablecoin. That's backed one to one. These are solid stablecoins. They're stronger than UST. They're stronger than anything that's algorithmic. Algorithmic stablecoins, I think we've seen the end of that. If you're in an algorithmic stablecoin or something that's not fully backed, dump it. My recommendation, not financial advice, because it's a target right now. It's a target. So those are the safest ones right now. Uh, Fully collateralized or over collateralized stablecoins. And again, USDC, BUSD, MIM, those are the ones that come to mind. There's definitely a bunch of others, but those are the ones that easily come to mind. Other question, how much should I invest? I mean, in a risky platform, I would steer clear of them totally altogether. However, if you want to be a little degen, if you want to take a shot, if you want to buy a lotto ticket, treat it as lotto. Would you put your entire paycheck into the lotto for the Mega Millions jackpot? I hope not. I wouldn't. So you want to consider these projects the same way. Not saying never participate in them, but treat them all like a lotto ticket. Because the truth is, if Luna isn't safe, and everybody swore it was the best thing out there, the most secure thing out there, the most safest thing out there with its stablecoin and its anchor protocol, then none of it's safe. So whether you're talking about Luna or Titano or SafeMoon, it's kind of all the same because it doesn't matter what kind of due diligence you do unless you are in the top 1% of IQ people in all the world and you have absolute amazing brilliance. It doesn't matter the generic level of good due diligence we all do with DeFi because they are all susceptible. No matter what research you do, no matter how many AMAs you listen to, no matter how many dev interviews you attend, it doesn't matter because 99% of us out there are not that smart. And I have put myself in that bowl as well. I ain't that smart. If Luna could fool us, then they all can fool us. And we need to just be aware of our weaknesses and just work around them. So, how much would I put? 0.01% into investing in all this wild stuff? And just again, a quick recap of some of the things that failed. Zion Finance, that was around for 4 years. 4 years. James Pelton, who has a great channel, he does a video about them, and then they rug pull the next day. They were around for 4 years. James Pelton does a video about them. He has a lot of followers, he has a lot of attention, and then they shut their doors the next day, rug pull the next day. Why? Well, I, my my hypothesis is because James Pelton, he has a huge following, and because of his huge following, is going to get a lot of eyeballs on them. And they realized and knew they were a rug pull just waiting to rug, and they didn't want that kind of attention. They didn't want that much money inside of their Ponzi, and they didn't want to have that much of the SEC come after them. So they said, you know what? We made out good robbing enough people for 4 years. Let's close up shop. So even something that was around for 4 years could wind up falling apart. Okay. Anchor, we already know. UST, Terra Protocol, total disaster. When the big boys decide they want to take your lunch money, they come in hard. And that's what they did. BlackRock, Citadel, the big boys, trillionaires, companies worth trillions, hundreds of trillions of dollars in capital they deal with, hundreds of trillions. They could literally buy the entire crypto market several times over with the amount of assets they control. They came for Luna's lunch and took it, and it was just happened to be a good day's work for them. They do that every day. That happened to be the big enough target that was on the board. MNFX. Yeah, so I don't know if you know about this one. Boom. Just recently, the guy that's running this, they were based in New York. They had a trading license. They had an office in Manhattan. It was a real guy, fully doxxed. Now he's going to jail. CEO of cryptocurrency and forex trading platform charged with fraudulent scheme involving over $59 million. This guy, Eddie Alexander. So again, another example. This project was a forex trading bot kind of thing, and it it seemed legit. It was around for less than 6 months. Had a home office in New York City, regulated. At least we thought it was. It was licensed. had a CEO, very public, and now he's in jail, fraudulent scheme. And they was offering very, very good rates, like between 5 and 7% weekly, 5 to 9% weekly. Now it's a wrap, done. Okay, so just be careful out there. Be careful. Atlas Node was supposed to be the competitor to Strong Node. As we see, Strong is doing horrible right now, but Atlas, they totally rug pulled about a month ago. They totally rug pulled, took the money, left, had a couple of the devs writing Medium articles to try to let the community know what's going on. It was touted by many, many influencers. Atlas Node, it looked legit, paid out regularly on time for a lot of people. But it was a Ponzi. It was a lie. It was a fraud. It was a scheme. And people got hurt. And Elephant Money, bank teller created this project and it grew to over $500 million, and he was subject to an attack and destroyed the entire platform. They're still trying to rebuild. Who knows if it's ever going to get back to its old glory. Project actually seems pretty legit. I mean, when you look at it, it's based around a stable coin, BUSD, right? The trunk is 75% BUSD, which is actually one of the best stable coins to have as your backing, because again, it's fully collateralized. Project seemed real smart, but the pot got big enough and there was enough holes in his project to leave him open for total disaster. Him and Do Kwon faced the same fatal flaw. They weren't immune to people who were smarter than them. There's always somebody smarter out there than you. And if your thing isn't airtight, then your lights are going to go out. Good night. And that's pretty much how it is in crypto. The majority of these crypto projects nowadays are potential rug pulls, or they're going to wind up having some type of fatal security flaw because the technology and the industry is just too premature. So I would say just consider that when you look at these projects and when you decide to invest, even stuff that we talk about on the channel or anybody talks about. Just be careful because it can wind up disastrous. So how much would I invest in any of this stuff? I'm still going to get involved with some of these projects that come out, but I'm definitely a lot more discerning. I'm definitely a lot more critical. And I'm always investing a lot less than before. But like I said, if you had to put a number on it, no more than 1% of your entire portfolio should be in all of DeFi, in my opinion. And each project should have no more than 0.01% of your portfolio. That's just how I look at it. I mean, who knows? We could be having this video a month from now, 2 months from now, and saying the same thing about Forex Shark and Drip. Like, oh yeah, well, it was doing good for a year or so, and Forex Shark just walked away. We didn't know who he was anyway. We don't know. This stuff is too new. Okay, so that's it for this video, guys. Just wanted to give you a heads up on my perspective on what's going on in the market. Let me know what you think. Leave a comment below, and please do us a big favor. Hit the like button as well as that subscribe button. It really helps us out with YouTube. We really need it. Crypto content is definitely suffering nowadays since the bear market turned. So we really need it. We really do appreciate it. All right, guys. Talk to you soon. Hey guys, thanks so much again for viewing our wonderful video, and please don't forget to hit the like button and the subscribe button if you found value in this, and please ding the notification bell as well. Thanks so much. See you next time.